Hey, thanks for tuning in. In this video, we're going to discuss wedge, flag, and pennant patterns. We're going to look at a few charts. Right now, we're looking at the weekly chart of IWM. This is a bull flag or a bull pennant. This is a large, contracting range over time. What you find out with these patterns is they're highly predictable, have a high probability win rate, tend to have a high reward and high risk. The profit targets are very symmetrical. And when the price breaks, they tend to run immediately. The pullbacks are less often, and it's rare where they, break out and then reverse. And that the slope of the channel can be in any direction. But generally speaking, if the trend is up, what you're going to have happen over time is price is going to do a little counter trend falling wedge. And if it's like a bear flag, you'll come straight down like this. Then you'll have a rising wedge and then another down move. And this, the symmetry comes in because, this here, we'll just call this A and B are always symmetrical. And because of that, newer traders, you can really fall in love with this pattern because it's, one of the easier ones to trade. It gets a huge win rate when they win. You get a really nice payout. And so it's kind of what a lot of newer traders, especially the day trader, variety traders, only will trade these patterns. And so we're looking at, this IWM chart, and you're looking at how, in this particular instance, the first pullback here, and really this is a weekly chart. If I were to zoom out one more time to the monthly time frame, you'd see that all of this correction is an inside bar on the monthly. So as soon as she's pulled back, it's really just been a series of higher lows and lower highs. And so we call this like a contracting triangle. At least that's how I'm viewing this. And the risk of this pattern, so you're building, the other way to look at it too is like you're building a lot of energy. It's like a coil. You're taking the psychology of the crowd and you're like, churning it a whole bunch. And either everyone's going to be trapped long or everyone's going to be trapped short. And that's why these patterns have such a huge, when the breakout happens, like it's just the volume comes flowing in and price doesn't generally pull back, is because the demand is now imbalanced in one direction or the other. And in this instance, you don't really know what's going to happen. It could be a long lasting top, right? Where price came up, went sideways, and then went down. And all the energy was released all the way back down to where the start of this ran was. The start of this run back in November. And, coincidentally filling this gap down here at 168. 163.62. So that's the risk of these patterns, and right now if you're long, the only way to really trade this pattern would be to buy the closer you get to 210, 208, and put your stop, a percent below that, right, 205 or so. And, if you come, coming down here, you knew that if price found acceptance below here, it was likely that this is some big zigzag or the start of something else. Same thing will be true down here. If price revisits, the assumption is you just stay in balance for as long as possible. Even if these higher lows break, like even if this higher low breaks, price could still just come up here, break this higher low, keep this lower high, and then you start forming this more complicated correction on the higher time frame, which in this instance would be the monthly. So keeping the context of this video within the flag pennant, the way we want to play this, the entire time is if 208, 209, 210, whatever of these is lost, then it's highly probable price goes all the way back to 165 area. If price finds acceptance above the high 234, then it's highly probable that she's going to $300. And this is just how these patterns work out over time. This is the bull flag, bull pennant. Yeah, let's take a look at a different time frame to give you so you can look at like right here, for example, on this day here, this looks like a bull flag, right? And then price came right inside, inched higher, and then flagged up here. So to me, this would be your bull wedge, right? The difference being we didn't come all the way to the top of the flagpole and then go sideways. That ultimately happened up here. But you can see how price just inched higher to get there, to form the bull flag. Because there still was a lot of supply up here, sellers that wanted to get out. So you get these wedges all over. You know, here's another wedge, right? So price comes down, comes back up, never got above this high of 158. You know, what's the symmetrical move? Something like that. And then you start to see these patterns everywhere, right? So there's your ABC, and even within the ABC, you've got an ABC up, right? But this, within the context of, you know, this video and what we're talking about, is your bull, in this instance, your bear wedge, right? So price comes down impulsively, volume picked up, volume declines off, wedge is higher, right? The retrace is higher, so this is your bear wedge, and then you get the similar move down. So your A is equal to B, right? There it is. So that's kind of like, and if you were to draw the line here, you know, something like that, right? She breaks down below this that day, and that's the end of it. But yeah, you know, these types of moves are in every time frame. You could even go in to the 65-minute chart and see a whole bunch of them. You know, here's a bull flag that failed, right? Price never got above the 227 tried. See, so here, you know, price comes up. All right, then we've got this ABC structure. This is our flag, right? So bull flag. The bulls tried to get back above. This is now what we call a reversal candle. It's a big wick reversal, and what ended up happening here is all the energy from this bull flag got released to the downside, and ultimately they went back to revisit the low here, and started, you know, the exact opposite move, right? And so the same thing, you know, if you can come down here. So bear flag down, ABC up. This is an expanding ABC, right? So you came down, broke the low, then came back, broke the high. And then you get another symmetrical move down from the breakdown area, right? So there's your A, B, C, bear flag, impulsive move down, right? Big old volume candlestick. As price rises, volume contracts, and then explodes again lower, right? And this is just what the market does over and over and over. And here's another one. Here it is again. Bull flag, ABC, bull flag, right? So just at a very high level, and you know, this is a bull flag or a bull wedge, right? Notice how price came all the way back down to the low and then did it again, right? Completed above the high of the A leg and then found more sellers. So this is, you know, showing you that this is likely in a downtrend here and has sellers and more pressure, or is in some longer term correction. You just don't really know. This is all corrective in each direction. Which is what we're seeing here on the weekly time frame, right? This is a correction. So that about concludes the video. I'm just trying to keep it short and sweet. You know, these bull flags, wedge and pennants are on all the time frames. You know, and this is their success rate. So this was taken from the patternsite.com. Bukowski, the high and tight flag. It's the #1 overall performing pattern, and these are the best chart patterns with best performance, lowest risk of failure. Average performance is 69% gain, tendency to retrace, you know, about 1 out of 2. And it reaches the target price. So the symmetrical move, it reaches the symmetrical move 90% of the time. So what's that telling you? You know, if you want to be a pattern trader, you know, this is one of the most reliable patterns to trade. If you want to be a day trader, this is the most reliable way to do it. If you want to be a swing trader, it's important to understand these patterns and definitely understand the risk of invalidation, what happens when certain levels are lost, what that means in terms of the probability of price revisiting the high or low of the bull flagpole or the bear flagpole. So, you know, I hope this video helps you, you know, learn how to see the patterns as they're unfolding in real time. And then if you have any questions, you know, leave a comment and hit the like button. Check us out on Twitter, and come see us in the next video. Hope you guys have a great day.